Oil Lubricants is the first corporate on our radar right now. The company will be acquiring a 51% controlling stake in the EV charger maker Tirex Transmission. Now, this 103 crore acquisition is expected to expand Gulf Oil's play in the EV value chain. Ravi Chawla, who is the MD and CEO at Gulf Oil Lubricants, joins us now to talk about that. Ravi, thanks a lot for joining and appreciate your thoughts here on CNBC-TV18. Can you tell us what is the rationale for this acquisition? What is the overall game plan? And what's the expansion plan that you're looking at post this acquisition? How would you be expanding in this whole EV ecosystem?
Well, yes, globally and in India, we've been looking for Gulf to stretch into the EV mobility piece. We made an acquisition globally in India in a car charging company called Indra, which has got good market share in the UK. We've also tested their car chargers in India. We've also got an investment in a software as a service company called Electrify, which we have done. I think this is a major step for us to look at Tirex, which is into DC chargers. These are fast chargers for the heavy duty segments, and also they can make chargers for other segments. They are a good growing emerging player with good technology, good quality and backup. They've already installed 400 chargers and they have close to 8% market share. So this is in line with our strategy where Gulf will obviously support them as a strategic investor, grow. We leverage our brand distribution, OEM tie-ups, infra, but importantly, Tirex has a growth plan which is to continue getting 10% market share with a market which is really promising, both in India, where it's expected to be 10 million units, in a few years, and globally it's a multi-billion-dollar market. So these are the two things where we are very excited to see how obviously they have their own brand. They also do white label DC chargers. In addition, the Gulf brand DC chargers. So very promising area for us, and we hope that in the future this will become a good growth engine for us.
No, absolutely, I agree with you. I mean, fast charging is the new buzzword, right? Especially globally, more than in India. I mean, it hasn't picked up as much in the Indian markets. But I take your point about the export markets for sure. Just two quick questions. One, is this company profit-making? And two, what is the kind of margin profile that you will be enjoying with this acquisition?
You see, this company has been in the market. As I mentioned to you, there are 400 DC chargers already installed, and they're growing. So obviously the funds will help them to expand further to meet the future orders, and they will definitely start making money soon. At the moment, obviously there's investment. There are 4 segments which are the public sector undertakings, electricity boards, the fuel sites. Then there is the OEMs which use DC chargers. Then of course you have the retail channel and the charge point operators. So there are 4 key segments. The profitability will obviously differ in each of the segments. So I think Tirex is well placed. They've already been there. They have a very good product. They want to localize more. And really these 4 segments, the pricing is different. So we have to be competitive. So it's definitely going to be a profitable segment going forward. Initial years, you do have to invest a lot. And with the investment, we'll be actually taking up our capacity multifold. And it would be literally, kind of doubling the turnover, more than doubling the turnover every year, as we see as, the order book and of course the potential. Plus, we'll be getting certification for selling these chargers globally. These are global certifications we'll take. So as you rightly said, the global market itself is a big upside. And, in India, we expect that the market will be about 10 million units by 2030. And the global is even multifold, a huge demand. Globally, this market is going to be 200 billion plus by 2030.
Okay. Right. So basically 1 crore units by 2030. That's the projection.
India, yeah, 1 million.
In India.
1 million chargers.
Right. And the market share, you said, is how much? 8% for this company?
Yeah, around 8%. The market is not clearly defined. We get numbers all the time. It's around 8%. Okay. And with Tirex, we are targeting 10% market share in India. We have not looked at the upside outside India, because that's an area of work in progress, I would say. Yeah.
So I mean, just scaling these numbers on an Excel type of model, Ravi. Hi, good morning, Prashant here. What would be if they are able to maintain this, you said they'll add market share as well, but let's assume they stay around 10% all the way over the next many years, up to 2030. What are the revenue you gave us a number of the chargers, right? If you go with that number, what will be the revenue? All else remaining same.
Yeah, as I told you, there are 4 segments. One is the PSUs and the petrol stations and all.
Got it. Yeah, I'm saying just give us a broad ballpark idea how to think about this in terms of the revenue potential.
Yeah, so the way we see it, obviously, if you're talking about 10% market share, you're talking about 100,000 chargers by 2030 if they get 10% market share, and the current value is around I would say more than 7-8 lakhs per unit. We will also be trying to get into with this make the other type of chargers with them. So mix of that will obviously indicate that in 5 years time, if we do get 10% share, you can do the math. It's at 7-8 lakhs per charger. It's a decent revenue which will come.
So 10 lakh units into 7-8 lakh per charger. That's the broad number. That's what we should work with, right?
5-6 years, if that is what we are. And of course, we'll have different type of chargers. So not all of them, we might go even to some AC chargers to be assembled here. So it'll be a mix of, I think, high end and also medium end.
So 200 crores of cash is what you have on your books. 130 crores is what you've used for the Tirex acquisition. What will the rest be used for?
So we are a cash generating company. So we do have more cash than that in terms of our fund flow. We have closed more than 400-500 crores in our fund flow. So this is obviously part of it, and we continue to generate cash every year with our core lubricant business, which will continue to grow. I would say similar to what the growth has been last decade. We see the same growth continuing in core lubricants, and we have a lot of market share to gain. So we will continue to generate cash. And obviously, we give dividend and we look at investments. So there's enough cash in the books to kind of fund these kind of investments.
All right, Mr. Chawla, hi, good morning. Clearly an interesting acquisition out there. And as you said, you'll be looking at doubling your revenues in the next few years or so. What kind of capex will you have to spend for this? And if I just do that doubling from year on, last year it was only around 13 crores odd. But if you keep doubling your revenues, you'll be in the vicinity of around 2,000 crores approximately. Maybe in the next 7 to 8 years? Or is the number larger than that? So what kind of capex? And also, will you be looking to buy the remaining 49% at some stage?
No, see, when I said doubling, I said Tirex itself today has 8% market share, and we look at that going multifold. Our core lubricant business, the revenue is around 3,000 crores. That will grow. For
Tirex itself, sir. For Tirex itself.
Yes,
what is
Tirex
the ballpark revenue number?
Yeah, so Tirex, if we look at 8 to 10% market share in 2030, when the demand is going to be 1 million chargers. So if we get 100,000 chargers at a 7, so obviously we are talking more than 500 crores, 600 crores kind of revenue in 5 years. So certainly that is what this sort of strategic investment will give. We continue to work. The Tirex team has got inherent strengths where they have made the technology happen. They have focused on this. So we continue to being, supportive. They are going to be with us. We're obviously going to make the company go further. So it's current. There is no plans to look at it. And this arrangement of 51% is more so that we are a strategic investor and we can also guide the team to grow further.
So, Ravi, sorry, you said 100,000. It's 1 million, right? Not 100,000 by 2030.
No, 2030.
Or 1 million. Sorry, 1 million is okay. I need to. 1 million is by 2030. The installed base of chargers, and 10%, that's 100,000 for you. Okay, just wanted to clarify that.
At 7 lakh, that comes to 7,000 crores, but right?
No. It will be less than that. I think it will. As I told you, all the chargers will be not 7 lakhs. There'll be some smaller chargers we'll make. So as a mix of that, I think top line will be, more than 500 crores if we get that market share.
Okay, so 500 crore of top line. And in this EV ecosystem, anything else that you'll be looking at? I mean, now that you're, looking at the huge potential here, apart from these DC chargers, anything else that you're eyeing?
Well, we have a brand, we have touch points right across, we have OEM relations, we have infrastructure. So I think for us, the two-wheeler segment also is quite an exciting segment. So we are looking at, options there. I think with Tirex, obviously the charger part, and with the global acquisition of Indra, we have the charger space. And then we also have software as a service. So we are going to look at a few areas, especially in the two-wheeler area, where we can use our brand distribution and our touch points. So definitely looking at some areas. Once we are clear about it, we'll definitely come up if we have focused on a target or a strategic investment. We hope that we can come up with some options here.
Okay, we leave it at that. Thanks a lot for joining in. That's Gulf Oil Lubricants. But let's get back to the market now.